Hello everyone, welcome to another video. The topic of video is debt consolidation loan. I make a slide for you that can easily you can understand this topic. Now I open a slide. Now the first page, streamlining your finances, a professional guide to debt consolidation loans in the USA. Now the first slide is Introduction. Welcome to the presentation on streamlining your finances with debt consolidation loans. In this presentation, we'll explore the benefits of debt consolidation loans and how they can help you manage your finances more effectively. So the next slide is, what is debt consolidation? The definition of debt consolidation is the process of taking out a new loan to pay off multiple debts. This allows you to consolidate your debt into one monthly payment, usually with a lower interest rate. Debt consolidation can help simplify your finances and make it easier to manage your debt. So the next slide is types of debt consolidation loan. There are two main types of debt consolidation loans. Number one, secured, and the second one is unsecured. Unsecured loans require collateral such as a home or car, while unsecured loans do not. Secured loans generally have lower interest rates but come with the risk of losing your collateral if you default on the loan. So the next slide is benefits of debt consolidation loans. Debt consolidation loans offer several benefits, including number one, low interest rates, number two, simplified finances, number three, lower monthly payments, and number four, improved credit scores. By consolidating your debt, you can save money on interest and make it easier to manage your finances. So the next slide is qualifying for a debt consolidation loan. To qualify for a debt consolidation loan, you will need to have a good credit score, a stable income, and a low debt to income ratio. Lenders will also look at your credits history and employment history to determine if you are a good candidate for a loan. So the next slide is risks of debt consolidation loans. While debt consolidation loans can be beneficial, they also come with some risks. They include losing collateral, extending the loan term, and accruing more debt. It's important to carefully consider the risks and benefit before taking out a debt consolidation loan. So the next slide is choosing a lender. When choosing a lender for your debt consolidation loan, it's important to consider factors such as interest rates, fees, and customer service. You should also read reviews and compare your offers from multiple lenders to find the best option for your needs. So the next slide is the debt consolidation process. The debt consolidation process involves several steps, including evaluating your debt, choosing a lender, applying for the loan, and paying off your debts. It's important to follow each step carefully to ensure a successful consolidation. So the next slide is debt consolidation versus other options. Consolidation is not the only option for managing your debt. Other options include debt management plans, debt settlement, and bankruptcy. It's important to weigh the pros and cons of each option and choose the one that's right for you. So the next slide is, and the last one, conclusion. Thank you for joining us for this presentation on debt consolidation loans. We hope you've learned more about how these loans can help you streamline your finances and manage your debt more effectively. If you have any question, please don't hesitate to ask. So I hope you understand about debt consolidation loan from this slide, but we have to go on Google Chrome. Then we can also search about it. So here we write debt consolidation. Here is consolidation loan in USA. Because we talking about USA, so we write here USA. So we open a website. It is updated recently 5 days ago, so we have to read this. Forbes, the website name. So here we are. Best debt consolidation loans of September 2023. Debt consolidation can be an effective way to streamline payments and potentially reduce your interest charges. It also may lower your monthly debt payments because, unlike credit cards, medical loans, and other forms of debt, personal loans often come with lower interest rates, especially if you have good to excellent credit. Many lenders also offer direct payments to third party creditors, so you won't have to worry about the logistics of consolidating your other debts. The best personal loans for debt consolidation offer low annual percentage rates (APRs) and a flexible repayment terms while avoiding fees like repayment penalties, so you can retire debt early without having to pay a fees. So why you can trust Forbes advisor? So we skip this portion. Here we are. Best debt consolidation loans of September are achieve best for paying off credit card debt. Discover best for no interest if repaid within 30 days. Upgrade best for bad credit. Number 4 point, universal credit best for comparing multiple offers. The next point is happy money best for flexible repayment terms. Next point, best tech for debt consolidation perks. And the next point, lending club best for peer to peer lending. Next point, Lightstream best for low interest rate. And the next line, Sophie best for large loan amount. So here are some offers they can show us. Now we have to read it. We don't need to read it because you read it by yourself, because here are some offers that you can read it and understand by yourself. So it's not a big deal to understand it. So personal loan interest rates depend on several factors, including the borrower's creditworthiness, lender loan amount, and repayment term. Typically, however, personal loan interest rates range from around 5.99% to 36%, with the lowest rates reserved for borrowers with excellent credit. Tips for comparing personal loans for debt consolidation. Personal loans often are available online through traditional banks, credit unions, and alternative lending platforms, so you can apply quickly and conveniently without having to visit a bank branch. Many of these lenders also offer competitive interest rates and flexible repayment terms, meaning you may be able to save money by consolidating your other debts. Consider these tips when comparing personal loans. Number 1 point, where possible, pre-qualify. Many personal loan providers offer prospective borrowers the ability to qualify for a loan. This means the applicant can submit detail about their financing needs, income, housing situation, and other relevant information to find out what kind of loan, amounts, rates, and repayment terms they are likely to qualify for. Even better, this process typically only requires a soft credit inquiry, so you can shop around without hurting your credit score. If you think you may benefit from consolidating your debt but aren't sure what rates you will qualify for, the pre-qualification process can streamline your search by ruling out lenders with higher rates. Consider the purpose of your loan. While personal loans can be used for a broad range of purposes, they are limited to things like consumer debt consolidation, home improvements, vacations, weddings, funerals, large purchases, and other personal expenses. For that reason, lenders often forbid you from using personal loans for secondary education expenses, business purposes, and illegal activities. At a minimum, when considering a lender, always confirm that debt consolidation is an acceptable use of the loan funds. Even better, determine whether the lender will pay your other creditors correctly. So here are some points. Keep an eye out for additional fees. Evaluate the lender's customer support option. You can read it yourself, so maybe you can understand from our slides. Here are some of the points you can easily read. So guys, I hope you like our you get information from us from our videos. I hope you enjoyed this. So kindly like, share and subscribe our channel Tech YT. Thank you.